I could not care less about my principal. I know the first point I said it's nice that I see that capital appreciation, but the reason I also said it's an afterthought, and this is the reason. When I invest in a dividend growth stock, even if the stock went to zero, which obviously it most likely wouldn't, as long as my stream of dividends is there and it keeps growing, that's why I invest. I don't care about the share price. I don't intend to ever sell. Hey everyone, this is Ian from ppcian.com, back with another video about dividend growth investing. I invest for dividends and cash flow. I like to invest in companies that pay an increasing stream of dividends over time, so that one day my passive income from dividends will surpass my living expenses. Today I want to discuss the topic of dividend-paying stocks versus growth stocks, those stocks that are considered of high growth but do not presently pay a dividend. And I want to compare and contrast both of them, because if you're just starting out on your dividend journey, or maybe you're already an investor, but you're considering, should I add some growth stocks to my portfolio? Should I have a balanced portfolio with both dividends and growth stocks? I think it's important to compare and contrast both of them to understand what you're getting into. And I just want to share my personal story about how I personally approach this topic. So let me just get my notebook here. As I always do with these videos, I jotted down some notes, want to share those right now. So most importantly, first point, dividend stocks, you can have capital appreciation, meaning the value of the company, the stock, goes up over time, and you get to enjoy dividends. However, and a dividend is typically in the United States a quarterly payment, profits that the company shares directly with you. Money, it's basically a check that you can receive that you can go use to finance your lifestyle. Now, with a growth stock, there are no dividends, so the upside that you have is all capital appreciation. You're not going to see any dividends unless they choose to offer a dividend in the future. But this is one reason I like dividend stocks so much, is you're not just in it for the dividend. You can still see capital appreciation with a dividend stock. In fact, it's not the primary reason that I invest. In fact, it's something that is almost an afterthought for me, but it's a nice to have. You get both with dividend paying stocks. So one other point, the second point today worth noting, is that of volatility. I am the kind of investor that likes a slow and steady return. I like to see my money grow over time. I like to have an increasing stream of dividends. And quite frankly, I believe that I don't need a miracle. I don't need a stock that just goes from $1 to $100 to make my dreams happen, because I've run the math. I know that compound interest is such an important and incredible force. In fact, Albert Einstein has been quoted saying that compound interest is one of the wonders of the world, one of the most powerful forces ever. And it really is. I know if I can get my steady returns year after year after year, I can get my steady dividend increases, I can reinvest the dividends, that snowball will take effect. And it doesn't require me to have some crazy return. It requires persistence and dedication. And that's why going with something of lesser volatility for me makes sense, just because I know I'm going to reach my goal that way, and it's going to be more predictable. It's going to be easier for me to sleep at night. By contrast, growth stocks can tend to be very volatile. Some of them go way up and do very well. But those are the ones you oftentimes hear about. You don't hear about the losers as much because people don't talk about those. But in the world of investing, there are plenty of growth stocks that are way up and then they come crashing down. And so do you really want to live with that volatility? Do you want to sleep with that volatility at night? Is it going to meet your long-term financial objectives? For myself personally, I don't find that is a necessary thing for me to achieve my objectives. And in fact, it may even derail me from my objectives, because if I experience volatility in the wrong way and too much of it, it's holding me back from letting compound interest do its work year after year after year. So point number 3, typically when you invest in a company that pays dividends, regardless of its market capitalization, the overall value of the company, it's typically a more established company. And more established companies feel better about paying a dividend because they have a predictable stream of revenue. They have a predictable stream of earnings. They know what they're doing. They can share some of the earnings with the investors. And they can oftentimes share more and more of it each year with the dividend growth companies that I enjoy investing in. Let's contrast this with a growth stock. Growth stocks typically do not pay a dividend, and they're less established. And what do I mean by less established? It doesn't necessarily matter their market cap, because you can have a growth company that's really big that doesn't pay a dividend. You can have a growth company that's really small, a micro cap that doesn't pay a dividend. Regardless of market cap, it's less established by the very fact that it doesn't pay a dividend. They're taking all of that money and they're investing it in their growth. They're trying to expand their market. They feel it's a better use of capital than paying it out to shareholders, to reinvesting it in their own business. So they're still in that hyper growth phase. And so by definition, I just tend to think of a growth company as a little bit less established. Sure, they may have a great portfolio of products. They might be big and doing well. But again, they're not paying a dividend. They're not sharing money with the shareholders. They're still growing. They're entering new markets. They're growing. Therefore, I tend to look at them as less established. For myself personally, I tend to enjoy investing in companies that are more established. But again, everyone has their own preference. I'm just trying to share both sides of the story here. So next point. We're in a really good stock market right now, a bull market. It's been going up for quite some time. At some point, we will experience a correction. We may experience a recession. Stock prices may go down. And dividend stocks tend to do better in a bear market, a bad market, than growth stocks. Why is this? They pay a dividend. In a bad market, regardless of what your share price is doing, you're still getting that dividend. You're still getting that income. You can still use that income to pay your bills, to pay your expenses, to fund your lifestyle. With a growth stock, you're not getting any dividends. So in that bear market, they might underperform. It might do worse. So knowing where we are in the market cycle, knowing my tolerance for risk, also just knowing I need the fact that I need that predictability, that compounding to reach my goals, and knowing that bear market may be coming. Personally, I tend to skew towards the dividend stocks. That's one of the reasons I like the dividend stocks. But then again, the growth stock investor may say, hey, bear market is great because these growth stocks don't do so well. I like to pick them up for cheap. So again, there's two sides to every coin, and obviously my story here might be a little bit more in favor of dividend stocks because that's what I do. But that being said, there's pros and cons to each. Next point, my favorite point. I could not care less about my principal. I know the first point I said it's nice that I see at capital appreciation, but the reason I also said it's an afterthought, and this is the reason. When I invest in a dividend growth stock, even if the stock went to zero, which obviously it most likely wouldn't, as long as my stream of dividends is there and it keeps growing, that's why I invest. I don't care about the share price. I don't intend to ever sell. And so what's great about a dividend stock is it's just easier to sleep at night. It's an easier strategy. It's a more comforting strategy. It's easier to have persistence with the strategy and stick with the strategy because it just does not matter what happens with the share price. As long as the company does well, the dividend keeps growing, and it's growing responsibly. Obviously, they're not funding it out of debt or they're paying more of a dividend than they're earning. The payout ratio is good. As long as the company's responsible and they're growing the dividend, who cares what the market thinks they're worth? As long as, in fact, I enjoy when my dividend stocks go down because I get to purchase more shares at a better price, a better yield. Now, obviously with the growth stock, everything's on that share price. And so you're so much more tied to what the market thinks. What does the market think that day of what your company is worth? And the market sometimes can be inefficient. And the market might undervalue something or misprice it. If you buy in at a high price and then it undervalues it for a long, long time, which can happen, you're out of luck. But again, with a dividend stock, that whole while, I don't care what the share price is because I invested for the dividends. And in fact, I'm happy it went down because I'm buying more and my dividend's growing each year and I'm earning more dividends. So those are just a few points comparing and contrasting dividend stocks, growth stocks. Obviously, I'm on the dividend side of the equation. I love dividends because one day dividends will pay all of my living expenses, and that will be a really exciting time. It's a really exciting goal to strive for in my financial life. But that being said, here's an interesting point. You may be thinking, Ian, should I have both? Should I have a few growth stocks in my portfolio? Well, I have two thoughts on this. One, for 99% of the people, at least speaking hypothetically here, I think it's better to stay focused. What I have found, not only with investing but with life, if you try to spread yourself too thin, you can't do it all. You can't be a jack of all trades and then a master of none. You want to master your craft. You want to have one discipline that you're really good at. So for most investors out there who are interested in dividend growth investing, I would try to stay pretty focused until you're really good at it and until your portfolio has reached a certain size. But the other side of the equation here is, yes, there are some cases where a dividend investor may want to venture into growth stocks. I think one of these cases is if you have a very good opportunity in front of you. It's an opportunity where you see an asymmetrical return, meaning your upside is so much better than your downside. It is exponentially better, and you may be able to do 10, 20, 30, or even 100 times return on your investment, and you already have a dividend portfolio that's pretty big and substantial. Maybe you want to allocate a small amount of money to something like that. I've done it from time to time. I've dabbled in angel investing. I typically only invest in companies where I know the CEO, I know the co-founders, and I know their business model very well. And I allocate a very small amount of capital to it as a percentage of the overall portfolio because I know I could lose it. But the reason I do that is if I could see 100 times return on my money, once that's done and I sell it, I've harvested all this money that I can then place into dividend stocks. And so that, I would say, is, but my goal is always to go back to the dividend stocks. That's what I'm laser focused on. And so I'm not completely against growth stocks. I own a few of them, typically in the form of angel investments. But it was many years before I started doing that. Many, many years. And I've been in this dividend game for a long time. And so you got to build that base first. You got to build that fortress, that machine first before experimenting with things like that. And then it may never make sense to experiment with stuff like that because you may just not have the right opportunity, and that's okay, because the dividends alone, the dividend strategy is more than enough, in my opinion, to reach those goals. This is Ian Lopuck. I'm from ppcian.com. Thank you for watching my video today. If you enjoyed the video today, I please invite you to subscribe. There are more on the way. I also invite you to please send me your questions. I really, really appreciate those questions. I do want to let you know, I am not, as a disclaimer, I am not a financial advisor. This is not investment advice. I'm not a licensed financial advisor. I'm sharing my passion here on YouTube. This is just for your fun and your entertainment. If you are going to invest in the stock market, please go and meet with a licensed financial advisor first. Thank you for watching. I will see you in the next PPC Ian Dividend video.